All right, quick market recap. So we had a very strong close on Friday. Looked like we were going to keep going up on Monday, which is actually what we did. But it's all about the close, isn't it? And the close was, I'm not going to say horrible, but it was, we gave back everything. And it looks bearish now. And trust me, at some point in the day, it looked pretty bullish across the board, but very, very bearish, especially the Russell 2000. We'll get to that. But look at the S&P. I mean, the high we got to was essentially the high of this Friday here, as you can see. I think that does coincide perfectly. But again, the close is essentially where the close was on Friday. It's just after all those gains, it looks like a shooting star. Very, very, not very, very, but bearish. This really does indicate the probability will go lower. Now, we do have Fed talking tomorrow. Essentially, I think it's 30 minutes after the market opens. So there's no point in really reading into it too much because everything just hangs on what he says, or at least the market's interpretation. I think the market will go lower after what he says because fundamentally the picture's horrible. And actually, I think in the last couple of weeks, it's become a little clearer that inflation persists, especially in Europe, and that rates will stay higher than people think. So yeah, I think we go lower actually. I just don't know whether the market will do that on Tuesday or Wednesday. Sometimes it takes an extra day. It's just something I've sort of noticed that sometimes it takes an extra day, after the Fed talks. A bit like on these days here where the market closes really strong, instead of the guarantee or the very, very strong likelihood of continuation, sometimes you get a reversal. So, and not necessarily on news. But anyway, to surmise, I think we go lower, especially towards the close tomorrow, especially on Wednesday. And at least that's what this type of a candle, shooting star, reverse hammer, whatever you want to call it, we go lower. That's the S&P. The Nasdaq is the exact same thing, although here we actually tag the descending line, so even more of a reason to consider the reversal credible because it really is after touching a trend line. So I really do understand why the Nasdaq did this. And again, this suggests a move lower. The Dow Jones, same thing. There isn't an obvious trend line. I was thinking that you could say, oh, the low of this area here, where these candles were touching, that was sort of the low. And then as soon as we broke it, we kept on going low. So kind of a retest. But in all likelihood, it was probably because the Nasdaq tagged its line that the other markets start to sort of retrace a bit, and then in the end we end up with these sort of shooting stars. So I think the Dow Jones just did that and just coincided a little bit with this. So I wouldn't read into this too much. It's more the Nasdaq especially, and then the S&P. The Russell 2000 though, look at this, again, Friday, very, very strong, close near high of day, close outside the descending. This really does typically suggest we're going to go up. And then look at that, we didn't even go and take out that Friday high in the Russell. And here we've closed way below the descending line. But not just that, we went lower than Friday's low, and the close was pretty, I mean, look at that, minus 1.5%, whilst the others were unchanged. It's not going to take much for the Russell to test its low here. 1.5%, basically another move like today, and we're there. So I think the Russell is the weakest out of all of them. Not just today, obviously today it is, but going forward to take out its low. And then that's what it takes. The Russell goes below its low, sort of not even a 2% move, like 1.5% down, close. And you've got to close below the low. That's nothing's guaranteed, but that's really, really a high likelihood that we go lower to the next level. So, and I think what would happen is if the Russell goes down, obviously everything is going to be dragged down a little bit, but how much will it take for the Dow Jones to test its low? 3%, that can be done, not even 3%, that can be done in two, 3 trading days, one really aggressive trading day, but more realistically, 2. So if you have the Russell going down after the Fed speak, the Dow is going to be starting to look like it's going to test its lows, and the next day, like Wednesday morning, or whatever, Wednesday during the day, during the trading day, you got the lows taken out in the Dow Jones. That means the Nasdaq will be all the way back down here, and same with the S&P. And then just imagine what the chart looks like. Let's just look at the S&P, which is not the weakest. Imagine we have 1 or 2 trading days and we're down here. If we start to close below this level, just think about what that chart looks like. It's going to be lower high, and it just looks like it's destined for here. And once it gets here, what's it going to do? Okay, we're going to bounce because nothing goes down in a straight line. We'll bounce, and then it'll just be another. I really do. And I think I've drawn this before because I still see this pattern playing out, which means this here was a head fake. This was a fake out. This trapped a bunch of technical traders like me, although I didn't get, taken out by this because I believe fundamentally we need to go lower. But I would usually respect this type of a breakout. It's just I can't ignore the fundamentals. So, but yeah, that's what this would indicate if we go all the way back down. This was a fake out because this wasn't just on the S&P, it was across the board. And it's a really credible, for me, it's the greatest trend chart pattern to play, the breakout, the descending. It's a bull flag. So anyway, that's what I'm thinking. I'm not just thinking about tomorrow and saying what I really think is going to happen, which is the market will go down. But I'm just sort of looking 2 or 3 days into the future if we continue lower. And then, medium term, what it means. Obviously, I could be wrong, but, we'll probably have a little bounce, by the way. Don't just go all the way down straight through a support zone, but, a little move up and then down and move up, down, sort of like this. We'll have little orderly bounces. The market is never really chaotic. There's always some order in the chaos. So, okay, this looks horrible now, but I think you get my point. Sort of down, bounce, and then down. So yeah, that's what I think is going to happen in the markets. Let's obviously see. The VIX, I just want to have a day where I just don't cover the VIX at all. Unchanged makes sense because most of the indices were unchanged. I expect this to go up, obviously, if the markets go down. Let's look at rates. Rates reversed nicely and closed pretty much high of day, very strong looking stuff. If you consider that we're going sideways, I did expect rates to go a little lower before going back up again. I do think we're going up again, just like I think the market's going down again for the same reason. They are inversely correlated. But 1 year held its own quite well, sideways, not even sideways down. 2 year, same thing. It was a green day. Forget this red one. It's just the next trading day has already started in this case. But, pretty bullish, actually. I wouldn't even say this is sideways. I'd say this is like sideways up because that Friday we closed red and I thought, okay, we're going to go sideways down. But look at that. We reversed already, perhaps in anticipation of what's coming tomorrow. And I think what's coming tomorrow is the Fed saying, look, be ready for rates staying higher than you think and forget the rate cut for now, which I don't think is priced in fully. So, for me, what I think is going to happen, sideways, up, maybe not even sideways, because things are moving quickly and the Fed speaks tomorrow. So we could just, and what's the next sort of flashpoint? What's the sort of the landmark? We're going for 5% on the 2 year, and the 2 year is the most important thing. Everyone looks at the 10 year, and that is very important. That's the next most important thing. But, and if you compare the 10s and the 2s, what did I see today? 2s and 10s inversely, I think it's the strongest inversion of the yield curve since the 1980s, 1981 or something. So new sort of record move for this bear market. That just signals more pain, right? The type of pain that brought us all the way down to, when we were at the lows in, was it October or something? So, we should be down there, really. I mean, either the bond market's wrong or the stock market's wrong, and I've got my money on the bond market. So yeah, that's the 2 years. The 5 years, just doing the same thing, just a few days behind. I expect that to test 4.5 soon. 10 year, I expect that to test, 4.3-ish soon. Actually, if we have a strong reversal, we move up. I think that's the next. Well, you can see what the trend line is. So just 4.2, 4.3 on the 10 year. And the 30 year is just a bit behind. That makes sense. We've got to crack and close above 4% on the 30 year. We ventured up there just a few days ago, and that hit the headlines. But I'm looking for a close above 4% in the next 2 days. That should cause chaos. The EU yields exactly the same thing as the sort of 1 and 2 year of the US. Very strong, looking to move higher. And the EU, I mean, the inflation data that came out, was it last week? The last couple of trading days, horrible. So that has to go higher. And I think you've got more talk with Christine Lagarde today saying rates need to stay up. I mean, she's a total muppet. This one got everything wrong, but at least she's not completely lying there. Rates will have to go up, and much more, because inflation is a lot worse than they lay out. Let's look at the dollar. Now, this did actually go sideways down, which I thought was going to happen to the dollar and yields. It's happened to the dollar. I do not, however, think that we're going to go and test this support zone. I mean, if Powell says something which is bearish the dollar, so sort of dovish overall for the market, then yeah, for sure we'll go and tag this straight away. And you know, I'll say this now, on big news events, especially Fed days, and you know, the Fed's testifying, it's not really a statement followed by Q&A, I don't think. But generally on Fed days, the market will just go one way and reverse. And I said this a few times, you probably remember already, but you can kind of make money on both sides. It's difficult psychologically, but if you just act like a robot, you can do it. You know, you see the market go down in the first 4 seconds, you just buy it, and then you probably have to wait 4 minutes, but maybe you see what I mean when he starts to talk, or when you start to see a big move in one direction, just watch the sort of reversal come up. It's quite funny. But I say that to say this: if you do have a big move down in the dollar and it touches this, it's probably because it's going to reverse and actually start going up to a new high of day. I don't know, let's see. But the point is, I do think the dollar will end the day, and it's all about the close, not really the intraday move. A bit like today, the close is more important than the open, and totally the opposite. But yeah, I think if the dollar does end bullish, it will be very quickly very bullish, because if we have a sort of close at 105 or higher, the next day we're going to be here at this trend line. And you know what? If we're going to move up with the dollar and the trend is your friend, the trend is up, the short-term trend and the long-term trend, actually, the medium trend was just some consolidation. But if we do move up, then this is going to look very bullish very quickly. And it won't take long for us to be above this trend line. I say Wednesday morning, Wednesday during the day. And if we're closing at 106, this thing's going to go up a bit more, because not only does it technically look bullish, but we've just had the fundamental reason, Powell speech behind it. So I think it got more fuel to go higher before running into resistance. And this should be strong resistance, by the way, and not just this trend line, this horizontal one, but the descending one. So let's see, let's see how the market reacts to what Powell says. But I think the dollar could go up. And if it does go up and its close is strong, it can only continue, in my opinion. Let's look at commodities, starting off with copper, which is very hard to call. But you know what? We're in a bit of a wedge here. You can see here it's really stuck between this range, which is nice, because then I don't really need to guess anymore, because it's very hard to guess this chart pattern. It's very weird, very rare to see this sort of move up and then stronger move down and then very equally strong move up and whatever. I'm not playing that game. Let's just see what happens. It's going to be forced to break out or break down, so we'll see what happens. I think it'll go down as the dollar and the yields go up, and I think commodities will generally go down, maybe not all of them. I think gas and maybe even oil to some extent are a bit special, but copper tends to follow the general markets because sort of massive component to markets. It's called Dr. Copper for a reason. Let's look at natural gas. Now, this finally had a strong retracement. This is what I was looking for, because I haven't really played natural gas. I've been doing all these paper trades and everything, which is nice. The only sort of natural gas related security that I'm in is is Trillion Energy, and that's not really moving with gas, so it doesn't really count. So I don't really consider myself as if I've got skin in the game, and I want to. Plus, I really think this is, like I've been saying the whole time, totally oversold. Now, not anymore, but the RSI must be much higher after this 40% move over here. That's why I thought there might be a bit of a retracement, and we did get that today. So after a 40% move, we had a nice 1.50% drop, right back at support, which used to be resistance. So actually, I did find an ETF that I can buy, because I can't usually buy ETFs in Europe, but the LSE, the London Stock Exchange, does have one that I can buy, I think is called NGAG, natural gas, NGAG. And if that's the case, then tomorrow, maybe after Powell's speech, maybe I can get a lower price using the Powell catalyst. But the point is, I want to start a position in natural gas, the commodity, and what a great time to do it. I'll buy basically wherever it is. I'll consider it an area buy, and if it goes lower, great. I think it'd be an even better buy. And if it goes lower than that, I'll buy more. I think I want to do 5 times 20% tranches for natural gas, and I really don't mind my first entry being around where we are now, 2.65. So hopefully after tomorrow, I can start to indicate where my first real entry is on natural gas. But loving the pullback. And where do I think it's going to go? It's hard to call. I think natural gas is in a world of its own, and it might be influenced a little bit ultra short term by Powell, but otherwise, I think you could have the market down 4% and natural gas up 3%, because although that's unlikely to happen, I just mean that they're probably in different lanes at this point, because natural gas is so oversold and in a world of its own, with its own supply and demand and geopolitical influences. So anyway, natural gas, great pullback, very bullish, long term, medium term, short term, not so sure, but I'm going to buy it anyway. The first tranche. Oil, that was it's a bit like copper. I just switched to copper. Look at that, a little wedge. Oil, however, is more developed. It broke out of that wedge. I saw that on Friday. I remained bullish because it closed a higher day and it broke out of the wedge. And today it did venture a bit lower, but closed a higher day again, very strong, above 80. Probably should get to 82, but again, this Powell thing could throw a monkey wrench in that. But for me, overall, I've said it a lot. Oil bullish, medium term, long term, short term. You could get a little cheaper. We're in this choppy channel, but I've got to say bullish. Closed a higher day. Looks like we're going to get 82. But who knows, we could get to 82, and then with Powell saying something, it could start going red, because I do think commodities will go down after Powell gets uber hawkish, which is, again, something I can only predict. But, medium and long-term bullish. Gold and silver. So I'm going to say that I hope we do come down, because I bought when gold was at 1830, at 1800. I've sold a little bit of that tranche. And if it goes higher, I sell more. If it goes low, I'm going to buy back what I sold. But I think we might go quite a bit lower if we do go lower. The first support zone, I don't even see 1830 as support zone anymore. I think it's 1800, just above 1800, like 1805, 1811. So I'm just going to place this here. That's where I think support's going to be, because after Fed Day, especially, you're going to have a bit of a move, and it's not all going to happen on the first day. It's going to be 1 or 2 days, but 1.5% move in gold, that's definitely doable on a big day. But I think it will take 2 days, and we could get to 1800, bounce, but then what? If we're going to go to 1800, maybe we're going to go lower. It depends where the dollar is by then. If the dollar hasn't finished its move and we're already 1800, then it's got more room to go. So there's gold on the downside. I'll just let the chart play out, but I'm hoping for a move down to buy back what I sold. And if we go lower, I've got more to buy. So I look forward to that. On the way up, can't discount the move on the way up. It could easily get to 1870. And I think the next resistance, I thought about this, is actually 1890, not 1880. 1880 was good here when we came all the way back down, but it's not a zone for me. It would have to be the high of this range, and that's this day here, Thursday the 9th, and that's basically 1889. So, I'd be selling if I had to sell 1888.89. But maybe not in one day. I think 1870 would be the first zone if we have a move up, which means Powell's being dovish. So just covering both sort of zones, I'd sell this, I'd buy that, and if we go higher, I might nibble another bit out. But I think by here, I'd be all out of the tranches I bought here. And then I'm just holding what I held when I was here anyway. So it's sort of another sense of invincibility. And I like that. If it goes up, I'm happy I've got a plan. If it goes down, I'm happy I've got a plan. I feel quite invincible, which is like a nice psychological hedge. Looking at silver though, silver was weaker, which is bearish overall. You see, when on the way up, when you see silver stronger than gold, when you see the juniors stronger than the seniors, when you see the silver juniors stronger than the gold juniors, these types of differences for me are bullish. And likewise, if the opposite is true, then it's bearish. And here I see bearish indication. I see silver was weaker than gold, and look, gold was at 18, basically 1850 today, just retesting support. Prior resistance becomes support, so it's not even bearish. Silver though, didn't venture that high, just gave back a lot, and okay, we didn't close below 21, but still, a small move lower tomorrow, and we're starting to look like we're testing the lows again very quickly. So for me, silver was weaker. It's obvious where the support and resistance is. Let me just place this one here, 20.5. Yeah, I just feel like silver's weaker, and it won't take much to test the lows, and then another day to actually breach through, and then we're testing a setting support. So let's just see what happens. I'm not going to cover the basis, the two different scenarios in too much detail, because ultimately, Chairman Powell will talk, the market will move, and then we can make a more decisive move, I guess, the next day, or when I cover the next video. Let's look at the miners though. Miners, yeah, GDX and GDXJ were kind of down the same amount. Not too bearish, just giving back. Makes sense what happens. But again, let's see what happens. If gold and silver move down, I think the next real zone of support, I've marked it here quite well, 27. That's not the absolute low, right? Because we touched 26.70 or something, but I think that's where we would find support. It's a round number. It's also the low of these 2 days. So I think we're more likely to find support at 27 than below. But again, if we have a massive red candle and it closes at low of day, then we're going to go lower. But still, the first zone of support is here, so I'll leave that. On the way up, if we do have a move up, yeah, we'll stop off at 29, but we're probably going to go higher. You can imagine what the chart will look like, and gold and silver too. So I think we'd actually go straight away high to the next zone. So let's just wait and see what happens. GXJ, it's a big candle here because I'm not really sure which part will be support. Will it be 33 or will it be below 32.50? I'll just leave this candle here. It's general zone, whether you buy at 33.01 or 32.51, kind of the same thing. So it doesn't matter too much. And on the way up, I've marked my resistance points. Don't need to really explain what I'm doing there. Yeah, let's see what happens. Let me finish very quickly on Bitcoin, which, yes, obviously was very weak because it went down just before the weekend or during the weekend, just before, I think. Stayed low. I don't think Bitcoin's allowed to make any crazy moves without the Nasdaq these days anyway, but it's really been underperforming. And now with the market weak, I'm going to leave this in actually. Usually I delete all my annotations, but this one I think is just completely perfect. So yeah, I think we're just gonna, obviously everything depends on what Powell says, but if Powell says the market's low, this will go straight down to 21,000. What is this, 300-ish? Let's see, maybe bounce a little bit. The next day back down here, and then you're gonna worry about what the chart looks like, because this is totally breached trend lines and very heavy head and shoulders, whatever. You've got lots of different chart patterns in play at this point, but the point is I think it's going to go back down again, and then it will bounce, but still it's basically failed at its massive attempt at reclaiming, closing above 25,000, and that's not good. So, and if the Nasdaq's going down, this is one of the more speculative ones, so you could see Bitcoin go all the way back down. But we're far from that for now. Let's just see what happens with Powell. And one last thing I'll throw into the mix, and that is my friend Credit Suisse, which was trading below $3. I think it was at 280 at one point, even at 270. And I said, now $3 is going to be resistance, which has been pretty much the case. We closed at 3 today. Watch out, if we have a down move, this can start going all the way back down again to new lows, and then it's kind of in free fall. And I think its biggest shareholder just totally liquidated. Is that right? Some big bank just totally gave up on Credit Suisse's attempts to prevent outflows, and you know, that's all it takes, something like that. And just watch out. Credit Suisse is well, there are lots of black swans. There's no point in singling out Credit Suisse. I just thought I'd just mention. I'm keeping my eye on that. Anyway, I hope that wasn't too long. Let's see what happens tomorrow. To be honest, this entire video could be irrelevant by tomorrow because of what Powell says. It's a shame, but still, I do actually still think that, you know, yields will go up, dollar will go up, everything else will go down. It's just, it'll be interesting to see what goes down more than the others. And yeah, let's see what happens. All right, enjoy the evening.